In the equity quadrant, the March Nasdaq future fell for the fourth session in the last five and hit an 11-week low today. The high today was 25,514.25. That was up 0.24%, and the low was 24,783.50, down 2.63%. With a little bit of time left in the future session, the Nasdaq is still down about 1.6%, and since the recent cycle high on January 28th, the Nasdaq future is now down almost 5%. While overall earnings have been okay, some recent weakness pulled the Nasdaq lower. Nasdaq futures got hammered today after AMD tanked 15 to 17% on disappointing Q1 guidance despite beating Q4 estimates. The chip maker's lackluster outlook triggered a broad semiconductor sell-off. Broadcom dropped 7%, Micron dropped 11%, Lam Research said 12%, Applied Materials lost 9%. Software stocks kept sliding as investors worried AI tools could eat into those companies' margins. The rotation out of tech accelerated with the Nasdaq-100 spending a second session below its 50-day moving average while defensive sectors outperformed. We also have to look at Treasury yields across the U.S. curve as they were slightly higher again, serving as increased competition for the Nasdaq. This often hurts the Nasdaq more than other indexes, all else equal. Growth stocks in tech trade at fat valuations based on future earnings. So when you can lock in a decent yield on safe treasuries, money rotates out faster. Higher rates also jack up borrowing costs for these companies, making the Nasdaq way more sensitive to rate moves than your typical defensive plays, consumer staples, and healthcare and sectors like that.